Hi guys, and a warm welcome to this week's edition where we're going to look at a couple of pairs and also the two commodities, gold and Brent, and then we'll also look at dollar index. So I did ask on the group which currency pairs you guys want me to have a look at, and I got a few suggestions, so we're going to look into those ones. So to start with, we're going to look at dollar index, right? So remember the analysis that we do, say in the previous week or the previous month or during that quarter. Learn to always carry it with you. Don't go about changing your institutional order flow on the chart. As you can see, if I go to the weekly chart, you remember correctly, I marked this weekly institutional order flow, the one with 1 and 2 bearish order block. I marked them probably beginning of January, if I'm not mistaken, or the second week or third week of January. And we can see now how price has reacted, how price has been delivered. So I'm going to go back to the monthly chart. Now, if you look at the previous month, right, we're just into the first week of March right now. The previous month candle, it closed below the fair value gap on the weekly chart. That's a clear reversal sign. And if you go onto the weekly chart now, you can see there we've got higher low, higher high, lower high. That's our reversal pattern, right? And if we are on the weekly chart, you need to be in a position to highlight your trading range. So you're looking at from this high all the way to that low. That's our trading range. And inside that trading range, when you grab your fibs high to low, for you to see the reversal zones where price is likely to reach before it trades to the downside. So from high to low, you're basically mapping out your chart in two divisions: premium above equilibrium, discount below equilibrium. So you can see right now, with the range in mind, we've got price just above equilibrium. But remember, inside that weekly range, you are going to get again ranges that are also inside the same range. You can probably see, say, this low here, the down candle, and the last up close candle, the ones that are giving us a bearish order block. This is also a range, right? So once you have a clear understanding now of how price has been delivered on the monthly chart, you can probably forecast now what the following candle is likely to do. In this case, in this instance, when we're looking at dollar index, we can clearly see that March has already started as a down candle. I believe we could see another run to the upside before we close lower. I'm forecasting March to close bearish on dollar index. Remember, I was forecasting February to close bullish to fill up the imbalance before price started moving lower, and that's exactly what has happened. So now our forecast right now, my forecast, let me put it that way. Remember, I just give you guys advice. I give you my own analysis, and you also have to do your own one, and then you can come up to a decision whether you are bullish or bearish. Right now, I'm going to be looking for lower prices on dollar index. I'm going to be hunting for shorting opportunities. I'm looking for a weaker dollar. I'm looking for market maker sell models on H4 and on daily time frame. So now, if I go to the weekly chart, right, you can see how price traded and filled up the imbalance on the weekly chart. That was 4 weeks ago. We filled up the imbalance and then price ran to the downside. In doing so, you can see we now have a bearish order block right there, right? We now have a bearish order block, though it's not high probability, but it will definitely offer opportunities on lower time frame. The different colored shaded area that looks like a magenta color, that was our H4 imbalance, where we were looking for price to go to the upside on a short-term basis in February. So now this is now void. We're not going to be using that imbalance. We're now going to focus on the bearish order block on the weekly chart, and you can see how price has found resistance. The previous week price traded into the order block and pushed to the downside. The current week that has opened, price hasn't reached the order block. Now if you're looking to say for targets, you go on to the next time frame. This is our weekly bearish order block. We also have this last up close candle. Can't really classify it as a bearish order block, though it's the last up close candle. When you go to say H4, you're going to see there, you see, you've got your bearish order block. Let me zoom out and maximize that level. So we've got this imbalance here. You see, now I'm on H4. This was the imbalance that we had, and it was filled almost right to the pip here last week. And then price traded lower. So going into this week, this level here, number one, high probability. That's a high probability zone where you should be hunting for shorting opportunities, because it's accompanied with a fair value gap. That's a bearish order block accompanied with a fair value gap. This imbalance section here, obviously it has been filled, right? But it will still offer you great opportunities for shorting the market. Then ultimately this bearish order block. Now this bearish order block, you need to put a run-off stop in play. You need to see a run-off stop above this last week's high, right? This high here, you need to see a run above those internal range liquidity of buy stops before price can trade lower. Okay? So that's the market maker sell model I'm just illustrating here. You need to be in a position to see price coming into this level. Once it's here, once it's inside your higher time frame premium area, you can see we've got an H4 bearish order block. We also have the weekly bearish order block, that gray shaded area. That's our weekly bearish order block. So I'll be looking for shorting opportunities from this level going to the downside all the way to 102. Now to help me with that, what do I need? I need catalyst. I need something that's gonna move price to that level. Now when we go to the calendar, right, Monday is already done. It was much of a, there wasn't really much going on, but yes, price moved. Then Tuesday, we've got PMIs for pound and euro PMIs, and you also have PMIs for the dollar. That's definitely going to move the markets, service PMIs. Then Wednesday, we've got Bank of Canada on the calendar. You see, we also have crude oil inventories and a couple of FOMC members, including Powell. They're going to be testifying, right? That's on Wednesday. That should definitely give us a clear expansion to the downside. Remember, when they testify, these guys, they're basically in most cases they're basically sticking to the narrative that they gave us during FOMC. See, so they're going to be grilled during that testifying. They're going to be grilled by the panel, or I don't know, whoever will be there, and they're going to stick to the narrative, to the forward guidance that they gave us during FOMC. Then on Thursday we've got ECB, right? On Thursday we've got ECB rate decision. This should push euro to the upside. You should see strength in euro on Thursday. Then we also have Powell again on Thursday. So you can see this week is quite filled with a lot of FOMC members testifying or speaking somewhere, somehow. So with that in mind, you need to understand where is dollar during that time they're talking. Where is dollar when Powell is testifying? Because remember, it can also be used as an event to liquidate stops. So you need to be well aware of how to trade the market. And I also think on Friday we've got NFP. Yeah, we've got NFP on Friday. So this week is going to be one hectic, volatile week. Opportunities are going to be galore, but you also don't want to stay very long in a position, because price can sweep you off and continue going in your direction. So this week is that kind of a week where you enter a position and you are satisfied with what the market has given you, you exit that position. Why am I saying so? Because you can have Powell testifying, right, say at 5 p.m. then you get FOMC member Daly speaking at 7 p.m. The market can swing in both directions. It can run stops in both directions. So you need to be in a position to take profit whenever you can when the week is quite volatile. So that's dollar. I'm looking for price to expand to the downside. I'm looking for expansions to the downside, probably after a bit of a redistribution into fair value. And you can already see I've highlighted one fair value range that I'll be looking to participate in, and that's the H4 bearish order block. So with that in mind, with the focus being bearish on dollar, the opposite applies now when we go to the euro, right? I'm going to be looking for long opportunities from discount, right? I'm going to be looking for long opportunity from discount. So I'm expecting euro to gain strength. Gain strength. So we're at a level of discount right here. That is a level of discount, and we now have a clear reversal pattern on the monthly chart. Lower high, lower low, higher low. If you go to the weekly chart, you see this is the price point that I'm illustrating, and you can see we now have a bullish order block here. Price dipped into that order block and pushes to the upside. You see, I'm gonna go back again to the monthly chart. We've got a bearish order block here, but it's not high probability. I'm expecting price to push through, whether it's March or it's April. I'm expecting price to push through and break above and continue going to the upside on Euro USD. So when you go to the weekly chart on Euro USD, you can see right now price is in discount, right? Price is in discount, and it hasn't moved to the upside yet. You see, price is in discount and it hasn't moved to the upside yet. So longs are ideal on Euro USD. You need to see market maker buy model on daily and on H4. So you have now to define your institutional order flow. The reason why I'm not doing everything, guys, is because I also want you guys to do the work, because that's the only way you can grasp and understand fully the concept. So you can see I've got a daily bearish order block there that's inside the weekly bullish order block. So that's a daily bullish order block inside a weekly bullish order block. And when we go to H4, right, When we go to H4, you can see right there imbalance. You see, price will be drawn to this level. What event will likely have price drawn to this level here, this 1.08300? Those FOMC guys speaking, ECB on the calendar, rate decision, you see, those type of events, they're going to be the catalyst for price to probably target all the way to 1.0887. You see, only when it reaches this bearish order block, then you should anticipate maybe a bit of resistance. But already you can see on H4, I've got a discount area that I've marked. You can go as low as H1, but there's just going to be too much noise. You use the H1 when market is volatile, right? Say for instance, when Powell is speaking, right, price can actually move all the way to this level, and you can see you've got your H1 bullish order block. You see, that's inside the H4 fair value gap, inside the weekly bullish order block. So highlighting your discount areas on euro is crucial for your entries, because you need to see how price reacts once it reaches that level. You need to see how price react. So same applies with cable. Same applies with cable. Pound USD. You should expect price to continue with the uptrend. Let me just clear this up and go to the monthly. Zoom in. You see, so we've got our discount right there. See, these relatively two equal lows here. Chances are very high that price might first want to trade below before it moves to the upside. So for swing traders, right, for those guys who like to get into position, right, and forget about it, once price say reaches the equilibrium level of this discount area, which is this zone here, you can see that there's like 300, say close to 400 pips, right? Once you see price reaching that level, you can enter a long position, right? Enter a long position targeting the previous old high, that level there. So that's a 1:2 return ratio, or you can target that level. See, that's for swing trading balls. That's a monthly chart. So when you go to the weekly chart, you can see we now have a bullish order block just below the monthly fair value gap. You can see the pound USD has been accumulating for a while now on the weekly chart, but on the daily you can see we've got a range. You see, price has been accumulating and it's struggling to break below that monthly fair value gap. So that would be an ideal area. We would like to see price say drop into this level here, you see, for a push to the upside, targeting these previous old highs. Then another pair which was suggested was GJ, pound yen. Pound yen, I'm still bullish, right? And remember, I gave you targets for this currency pair already. I think in the weekly forecast that I uploaded maybe 3 or 2 weeks ago, I cannot remember. So you're looking at 192.26 and 195.86. Those are your targets. Longs are ideal on pound yen. As long as the Bank of Japan is going to sit on the sidelines, yen is going to suffer. Yen is going to suffer against those major currencies that have got high interest rates. You see, so whether you look at pound yen or NZD-JPY or AUD-JPY, you need to be hunting for long opportunities. And as for pound JPY, 192 right now is the target for longs, and you take those longs in discount. So you just have to go to an H4 chart. H4 chart, you define your discount areas. Now remember, this is a minor pair, right? It does move. You see, you can see today it has already expanded to the upside by like what, 140 pips. But remember, the value of the pip here is a bit lesser than say on the major currency pairs. So longs are ideal on pound yen. You just need to be in a position to define your institutional order flow, your discount areas that you are going to be focusing on for long entries, right? Then we also have USD CAD. So USD CAD, I'll be looking for market maker sell model on USD CAD. So meaning I need to have my premium areas marked out properly, and also being in a position to see, say, negative news for the dollar when price is in premium, for me to short with more emphasis, right? So we've got our monthly, this is the monthly chart. We've got our monthly bearish order block right there, and that's where price is currently at, right? And this is the previous low. This is a target for shorts. Remember, we are forecasting a weaker dollar this whole year, so this is going to be a target if you are doing a swing trade, right? The equilibrium level of the monthly bearish order block right there at 1.37 130. So you're looking at about 250, 300 pips as your SL. That's for a swing setup, and targeting this level here. Currently the yearly lows for 20, this is December, right? This is December lows as your target for a swing setup. But for your short-term trades, your day trades, right, you need to be using institutional order flow on the weekly and on the daily chart, right? So for instance, we've got this daily bearish order block. Look how price crept to the upside, how it moved into this daily bearish order block. What are the chances that price is going to trade lower? They're quite high, but we need to trade above last week's high. So you go to the daily chart. Now on the daily chart, we've got our daily bearish order block, right? Now this is a very good setup. This is a very good setup targeting, say, the previous lows. Now when I say the previous lows, when market is bearish, right, when you're looking for shorting opportunities, try to use the down close candle as your previous low. Try to use the down close candle as your previous low. So once you go to that, then you go to the, let's go to the H4 time frame, right? You can see our price is distributed here. We've got H4 bearish order block. We've got like 1 and 2, right? These levels here, these premium areas, they're going to provide resistance. If you look at let's go back. Let's say you were day trading today, right? Or you're looking for scalps. This would be the order block that you'd have been looking at. From that equilibrium level, from here, you'd have already shorted the market. There's your 20 pips a day. So tomorrow you can practically use that bearish order block as a point of reference for your shorting opportunities, right? Then we also have Euro GBP. So you can go to Euro. Also have Euro GBP. Let's go to the monthly chart. Now there is a way that you can trade Euro GBP quite easily, and that is to use also you also have to use the euro pairs and the pound pairs together. So let's say Euro USD and pound USD, right? So for a bullish bias on Euro GBP, if you want a definite or a clear setup that Euro GBP is going to go to the upside, you need to see current pairs. Okay, let me see if I can illustrate this. Let me see if I can illustrate. Just a second. Let me see if I can illustrate this. Right. When you want to define, say, the bias on Euro GBP, this is what I found to be quite easy way of getting a definitive bias on where Euro GBP is going to trade to. So if you want a bullish bias on Euro GBP, right? A bullish bias on Euro GBP. Okay, let me just reduce this a bit so that everything can fit. Let's maximize there. Let's also maximize here, right? Because you might need to write this down. You might need to write this down. So bullish bias on Euro GBP, you focus on euro pairs and also pound pairs, right? So what you need to see for a bullish bias on Euro GBP, at a time when euro pairs, say Euro USD, is forming lower lows, you need to see pound pairs forming higher lows. That's a clear sign of focusing on GBP pairs for longs. You see, you focus for longs on GBP pairs, right? Then the opposite, bearish bias, right? Euro pairs, you need to focus to see them having higher highs, and then pound pairs, you need them having lower lows, no, lower highs. Yeah, this is lower highs. So your focus here is going to be on shorts on pound GBP, shorts on GBP pairs. So this can be, say, pound CAD, pound AUD, pound NZD. When you have Euro USD forming lower lows at a time when pound USD forming higher lows. So now with shorts, say you're focusing on bullish bias for Euro GBP, this is what you need to see. So Euro GBP is going to go to the upside. For a bearish bias, you need higher highs on euro pairs and lower highs on pound pairs. Euro GBP is also going to go to the downside. So coming back to the chart, right? With ECB on the calendar, I expect euro to gain a bit against pound. I expect euro to gain a bit, but with those PMIs that are coming tomorrow, right? With all these euro PMIs, starting with the eurozone, and then pound, and then dollar, right? We've got Spanish PMIs, Italian PMIs. They're all bunched up. I think the most important one there is going to be the German PMIs. So negative euro PMIs, then you're going to see pound gaining strength against euro. Positive PMIs, then you're going to see euro gaining strength against pound. So with that in mind, I'm going to be leaning towards longs on euro GBP, because we've got a reaccumulation phase that was completed right here, trading lower, and then price came back into that bullish order block, reaccumulated, and then we pushed to the upside again. So I'm expecting price to push to the upside on euro GBP, right? Then finally, the two commodities, gold and Brent. So everyone has been distracted with the rise of crypto, with Bitcoin, but most people have already missed gold trading above 2,100 an ounce. This is crucial, guys. This is very, very crucial. By the time people realize what has happened on the precious metal, people are going to be paying premium price for the precious metal. People are going to be buying gold at a higher price. So with that in mind, I think 2100, 2130, 2140 is the ceiling for the precious metal. It's the ceiling before we start seeing lower prices. But I won't be shocked if we continue going all the way to the upside, right? Since it's a year that we are expecting, we are anticipating a weaker dollar, gold should trade to the upside. But you can already see how it has moved, like the past 2 weeks, the past 3 weeks. I mean, gold has really expanded to the upside. Yet when you look at dollar, it hasn't really expanded to the downside. So probably gold is already giving us a signal of what's forthcoming on dollar index. So right now, longs are ideal on the precious metal, but only from discount. But right now we now have huge liquidity voids, right? We now have huge liquidity void. You can see today already we've already broken above 2088. If you remember 2088 from our first yearly forecast, 2088 was a level where we were expecting price to find some resistance and push lower. But right now the weekly candle has broken above. See, if you go to the daily, it's this candle here, broke above. Last week's high was 2088.22, just missed these highs by a few pips. And then this week opened with a vacuum and then pushed to the upside. So knowing where is discount is crucial, but you can see the voids are quite humongous. And with the precious metal, it's a case of being patient enough now. See, these liquidity voids are quite huge, and price is likely to rebalance all this inefficiency here that has been left on the precious metal. Then Brent I've already highlighted it, saying that longs are ideal from discount. Longs are ideal, and I've already marked this H4 inefficiency here, where I expect Brent to find support, buyers to come back into the picture and push price to the upside. and then there's also this inefficiency here on H4. I'm expecting buyers to push price to the upside, this being aided by OPEC plus, which has extended voluntary cuts for another quarter. Voluntary cuts for another quarter, they're basically trying to increase the demand on the precious liquid, thereby also pushing prices to the upside. So yeah, that's pretty much about it. I don't know if I have left anything. Euro, GBP, GJ, USD, CAD. Yeah, I've already covered all those. And with regards to NZD USD and AUD USD, these guys, they're basically reaccumulating. You can see the strength that we have in the precious metal. These guys, it's a matter of time before they expand to the upside, and this week we should see expansions to the upside on these two assets. Other than that, then gold should drop from where it is. You see, gold should drop massively from where it is. So longs are ideal on AUD USD and NZD USD, even starting with tonight. If there's anything on the calendar to help in looking for long setups on these two assets. So yeah, that's pretty much about it for today, guys. It ended up being a bit long, but yeah, be that as it may, it's something to give you guidance in your studies, in your analysis. And if you have any questions, guys, you just send them on the group. Let's get the group active. Let's get the group up and running. Let's discuss. Don't just be by yourself there. That's why the group is there. If you have any setup that you need us to look at, or if there's something that you're not sure about, just send a message. Say, Ivan, hey, this one is a bit of a conundrum. Can you help me out? I'll gladly assist. So yeah, with that in mind, guys, I wish you good luck and happy trading this week. Thank you.